I've onboarded a couple of clients in the last year that came to us not having paid or filed payroll taxes for the previous quarters. And that's a really serious problem because that money that you have withheld from your employees' paychecks is not your money. It belongs to the government. It belongs to on behalf of your employees. That's that they had withheld that is supposed to go to the government. So it really needs to be a top priority to get those taxes filed and paid.
You didn't start your practice to barely hang on. I'll guess you started it for freedom, impact, and profit. This is Therapy for Your Money. I'm your host, Julie Harris. I'm an accountant, author of Profit First for Therapists, and CEO of GreenOak Accounting. Over the years, my team and I have partnered with hundreds of private practice owners, whether they're just getting started, scaling into thriving groups, or even preparing to sell. We've seen it all, and we know exactly what makes a practice tick financially. On Therapy for Your Money, I'll help you build a business that truly works for you. You'll get quick, actionable tips and episodes so that you can grow a profitable practice, increase your financial confidence, and pay yourself unapologetically. Because your work is way too important for you to burn out or go broke doing it. Love the podcast? Make sure to follow and give us a 5-star review. Here is Therapy for Your Money. Hello, and welcome to Therapy for Your Money. Today we are talking about a topic that I love. Not everyone loves it, but I certainly do, which is payroll. It's a big part of accounting, and it is, unfortunately, one of the areas where things can really go sideways. It's incredibly important because if you have employees, they definitely want to be paid, but there's a lot of room for error here. And so joining me today, I have one of the amazing accounting managers on my team at GreenOak Accounting, Julia Henry. So hi, Julia. Welcome to the podcast.
Hello. Thank you. Happy to be here.
It's great to have you. So we are Julie, and our initials are the same. So that's not at all confusing for the rest of the team, but that's how it is. That's just how it is. All right. So let's just jump right in. Julia, you and your team have onboarded a lot of clients with payroll challenges is what we're going to call them this year. And so I thought you would be the perfect person to come on and talk about that. I would love to hear what are some of the weird ways that you have seen payroll gone wrong. What are some of the ways that business owners get in trouble?
Okay, yeah, sure. I'll start with kind of what seems like the most serious situation, and that is I've onboarded a couple of clients in the last year that came to us not having paid or filed payroll taxes for the previous quarters. And that's a really serious problem because that money that you have withheld from your employees' paychecks is not your money. It belongs to the government. It belongs to on behalf of your employees. That's that they had withheld that is supposed to go to the government. So it really needs to be a top priority to get those taxes filed and paid, pretty much your topmost priority when you have employees. And what goes along with that is that there's that obligation because it's keeping that money. Really, it's stealing. It's not your money. And the IRS takes it very seriously and they will come after you. So if you have withheld money for payroll taxes and not remitted it to the government, and you can potentially be personally liable for that money. They can go after your personal assets to recoup those funds. So that's a very serious situation. It's also very difficult to get kind of on the right track if you have a whole bunch built up over time. And so, you really want to get started filing and paying it correctly going forward. And then you can maybe sort out the history, but you need to file and pay going forward. If you're in that.
And that's definitely code red 911, like drop everything and you must get this back on track.
Mm-hmm.
Right. To your point, the IRS has unlimited power. They can come take all the funds in your business bank account. They can come garnish your personal bank account. Like those funds belong to the employees, right? When they file their tax return at the end of the year, those withholdings are going to show up on their W-2. That's really applied to them, their tax liability. So if you haven't paid it, that's where it becomes a really big problem. And so if I remember correctly, you maybe had someone who kept wanting to, well, let me like just catch up last quarter. And then, there were kind of 1 or 2 quarters behind trying to catch up. And how did you end up resolving, or maybe that's not resolved quite yet, but how did you end up getting that back on track?
Right. So when they first started working with us, I made it clear to them that we have an obligation to make sure that they are moving forward, that they are paying their payroll taxes and filing them. And so we insisted that they start doing that, and then making the catch-up payments on the prior quarters. That's something that to do as they can.
Yeah.
But getting started paying correctly going forward was really key. And there is one payroll processor that is problematic that you and I are discussing.
Are we going to name names? We
Yeah,
should name
that
names.
allows you to turn off payments and filing, which is really not a good situation. So if you happen to use QuickBooks Payroll, please don't ever turn off the filing and payment of payroll taxes. That is not optional.
Yeah, we got a little heated when we were talking about this episode. I personally think it should be QuickBooks Payroll should be illegal. That they even allow you to turn that off insinuates that it's an option, right? That not paying these taxes is an option, and it really is not. You can get in so much trouble for that. They should not. They should not let you turn it off. I also think all payroll systems should on the funds, right? They should. Those are not yours. They're not yours to pay whenever you feel like it. That is usually what's best for the company, even though they might take the funds a few days before they're actually due, right? And they're making money on that float. That's a good thing. We want all the payroll funds to be set aside and away. Yeah.
Yes. And that's actually a great segue into another warning, and that is to keep an eye on your payroll taxes. Make sure that your payroll provider is actually remitting them to the
Oh
government.
my gosh. Yes.
So if you have one of the big payroll companies, ADP or Gusto or Paychex, it's probably not something that you have to worry about. Those are big companies. They're doing that. But if you have a mom and pop payroll company, the temptation for them to take those funds that you think are going to pay the taxes and just hanging on to them is really, really high. And there have been scandals about that sort of payroll company. So if you have a smaller payroll company, definitely you want to be watching your IRS account, see that those payments are being made.
Yeah. And maybe once every year, or every couple of years, right? We hear of one of those scandals where they got behind, and so they're robbing Peter to pay Paul, and what you thought was going to payroll taxes was not. And so to do that, the way I know of is you get an EFTPS account for the EIN of the business, right? It takes a couple of days usually for the PIN to come, but once you have it, it's there. And then you can log on to that website and see that were the payments that are in my payroll system, were they made? I don't check that more than once a quarter. What is your recommendation?
Well, I would think quarterly would be
Okay.
sufficient, right? Because they're often, the remitted quarterly.
Just to keep
Yeah.
an eye and make sure that things are happening properly.
Yeah.
Okay.
Yeah, sure.
And so is part of your recommendation then also go with a big name provider?
Yeah, I mean, I'm sure that the temptation to work with a smaller company is high because the cost is less. But we recommend certain payroll companies because of this, because they're professional. We know that they are remitting their taxes as they should, but also because some of them are easier for us to work with than others, and easier for you to work with than others. So yeah, definitely, I would recommend a big payroll company. It's worth the extra cost.
Yeah. Yeah, absolutely. All right. What else can go wrong here?
This year in particular, we've seen quite a few businesses come to us where they have switched payroll companies once, maybe twice, maybe even 3 times in a single year.
That's a lot.
That's a lot. And switching payroll systems, particularly during a quarter, adds to complication. Getting things recorded so that your tax payments are recorded correctly, all of that is complicated when you make changes like that. And so keeping switching payroll companies to a minimum. Again, I think that comes back to making your payroll payments a priority. I think a lot of the people that came to us with this situation were switching because they weren't able to make their payroll payments in Gusto, and then Gusto maybe fired them. And I think if we are able to make the payroll first priority, that's maybe a little less likely to happen.
Yeah. And that kind of goes back to chicken and egg situation, right? Where cash flow can be difficult because of payroll. But then if you don't get payroll done, then that creates other issues with your team members and employee retention. But in most cases, in a group practice, almost always payroll is the single largest expense. And getting that compensation right and making sure it's something that's affordable is just really, really critical ultimately to the financial success of a practice, right? That's not really what we're talking about today. But if you're paying out 70, 75, 80% in wages, there's probably not a lot of wiggle room. And then if any one little thing goes wrong, then you can't make payroll. So I digress.
Yeah,
But yeah, we have seen that a lot, right? Where clients got bounced a payment or we're not able to catch up because it happens, right? Sometimes there wasn't enough money in the right account and a payment is missed. And if you can catch it up the next day, Gusto is fine or ADP is fine, right? They will keep working with you. It's not a problem. They might ask you for a few more days. You might go from 2-day payroll to 4-day payroll, which
right.
is reasonable, right? Like you missed the payment, but it's when you miss it and then they're never able to process it, they will let you go as they should, right? If you owe them
Yeah.
8, 10, $20,000, how can they keep working with a
Right.
small business that's not paying their payroll
Right. For sure.
liabilities? Yeah. So, what are some of the other issues that you've seen this year?
Well, let's see. There are a lot of ways that you can imagine paying your employees beyond their wages.
Mm,
And this is something that we end up doing a lot of corrections for. We see maybe there's a stipend for internet, or a bonus that you want to give to your employees. And you can't simply write a check for those things, or just reimburse it tax free for all of those things. Some reimbursements you can. If somebody has a receipt for something that they've purchased, you can absolutely reimburse them tax free. But the answer to the question of is it taxable, that's something that is a little bit complicated, and highly recommend that before you act by simply writing a check or setting it up somehow in the payroll system, check with us, check with your accountant to make sure that this particular kind of pay is in fact taxable or not taxable.
yeah.
Um,
Because
so the
Julia,
government, yeah,
that's not an option. Like you don't get to decide as the business owner which one it is. I know it surprises people, but you don't get to decide if it's taxable to your employee or not. It's in the tax code. It's not your choice.
that's
It
right.
is
There's
what
rules.
there are rules. And what
Yeah.
happens every single December, Julia? Tell our
Oh,
listeners.
bonuses. Yeah. You see a bunch of checks come through for bonuses, and you can't do that. They have to be, then we have to go and do a payroll correction at the end of the year. They have to be considered wages. And the reason for that is that the government does not want you to be paying people, large amounts of money that are not being put through as wages because they're not getting their piece of it. And any monetary amount that you give to your employees, including gift cards,
Yes.
small things, that is considered pay as far as the
Yeah.
IRS is concerned.
Any cash or cash equivalent, right? So that
Right.
includes gift card. It doesn't include like a small, a coffee mug or something. That's not cash or cash equivalent, but
Right.
anything is cash or cash equivalent. So what we see in December, almost every single year, there will be, a handful of clients who write a bunch of checks where we say, wait a second, what are these checks? And they'll say, oh, this bonuses. So we have to go
Hmm.
add them to payroll. And guess what? Once you gross them up, once the employer pays the employer and the employee side of taxes, it almost doubles it, right? So it ends up being almost twice as expensive as they thought, because you have to have the 401k on that if you offer a 401k. Like all of those things apply, and you end up paying the employees part of their income taxes as well. So it just makes those bonuses super, super expensive, more than
They are.
they had thought. And my personal pet peeve is when those checks go out on like December 28th, where we don't catch them usually until January, 2nd or 5th, be- because they're getting them, but they're not cashing the checks right away. And so you're in now a different tax year and it's a mess. It's fixable, but it's a mess. So
Yeah.
talk to your accountant if you're doing bonuses, have a plan in advance for exactly how much that's going to cost, right? I think that's benefit number one is you can figure out together how much it's going to cost exactly so you can decide what makes sense, but they can help you run it correctly so you're not fixing a bunch of things in January. Yeah.
Right.
Yeah, and that's always frustrating for the employees too, right? When you're having to go back and kind of adjust things.
Right. Yeah, that's another really important point. Anytime that you have to reach out to an employee to tell them, oh, there's a mistake, we owe you this money, or, we're going to have to withhold this money, that makes you look less professional. And that's not what we want. We want it to be seamless and have them have the confidence that you're doing things right on your end as well.
Yeah. And in private practice, there are often a lot of moving pieces to payroll. It's salaries are still quite rare, as they should be, right? There's a lot of risk to a practice when you have salaried clinicians specifically. But that means that there's already a lot of room for things to go wrong. And checking with your accountant when you're adding a new stipend or type of payment, right? Checking to make sure that you're doing things right can help set everyone up for success. And I'm a big believer that the practice owner should be involved in the payroll process, or at least someone on the business side, because a lot of times we'll see practices and other businesses that where the accountant is doing the payroll. That's not something that we do internally at GreenOak, but the accountant's not on site. We don't know what's going on. We don't know that Jeff was on vacation last week but forgot to submit PTO. Really, we just don't know these things. And so it's really helpful to have someone who's kind of boots on the ground with you, that has the pulse of the team, but also that has built um, that relationship with them, with your team members, and has their respect and their confidence, so that if something does go wrong, of like, yep, you're right, I missed your admin hours last week, where it's not kind of disrupting the relationship as much.
Yeah, that's a good
Yeah.
point. Sure.
All right. Are there any as we wrap up, is there anything that you wish every single business owner knew about payroll?
Well, let's say there's two big things. One is that the payroll taxes, they're not optional. That's probably the
Yes.
biggest, most
Okay.
important thing. But then the other thing is that trying to remember that any time that you're paying an employee for anything that is cash or cash equivalent, that it is considered wages and is taxable. And when in doubt, ask your accountant.
I love, love, love those. Yeah. If you just listen to those things, you should be good to go. You're going to avoid a
Mhm.
lot of different issues. Julia, as we wrap up, I'm going to shamelessly plug Gusto. They are our recommended payroll provider, not because they're perfect. No one is perfect. No company is perfect, but they do a really good job. And it's a great experience for both the employee and the employer. And they have a great support, right? I know they had a hard time a couple of years ago, but they have significantly improved their support team and their number of support people. And they're willing to fix things that if you go to ADP or Paychex or any of the big names, like they will just say, oh, that's not our fault. That's your problem. And you will have to manually fix that when you're not qualified as a business owner, right? You're not an accountant. You should not have to fix those things. And Gusto will help you fix it. And so shameless plug for them. They're
Yeah.
our preferred. They do not sponsor the podcast, but I do believe in them enough to say that still.
Right. And right. I have noticed actually that their chat feature is really quite good. I've had very knowledgeable people helping me using the chat. And they are quicker to make corrections, like you said, for sure, much, much quicker than any of the other companies.
Yeah. Yeah. I know in probably April, there were a couple of corrections that we were waiting on from other companies that we were just not able to file tax returns on time because even though we had notified them of some errors in November, they were not able to get them done before the end of the year or even shortly after the end of the year. And that's not right. I mean, if we notice something in November, the W-2 should be correct the first time it's
Mhm.
issued. That's not right, but some companies out there still do that. And you might have to file an extension. So,
Right.
yeah.
Definitely worth the extra money.
Yes. And it's not that, I don't think it's significantly more expensive than the competitors. I think it's still very reasonably priced, lots of different options and tiers. And so you can get what you need and pay a very reasonable price for the peace of mind that it brings, certainly.
Yeah, agreed. Yeah.
Well, Julia, this was your first podcast episode
My
with
very
me.
first podcast.
Your very first one. I hope this is the first of many. I'm just going to put it out there. And if you happen to work with Julia's team, let her know that you listened in next time you see her, because I know she's going to be happy to hear about it. So thank you, Julia, for joining me today. And I hope I'll see you on the podcast next time.
Thanks. Bye.
That's it for today's episode of Therapy for Your Money. Catch us on Instagram and Facebook at Therapy for Your Money Podcast. And don't forget to subscribe to GreenOak Accounting on YouTube. Until next time.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.